Welcome to the second webinar, the Liberal International Climate Justice Committee's Sustainable Economy seminar series is running to foster solutions-oriented learning and inform the committee's policy positions. I'm Dr. Imad Ahmed, member of the Liberal International Climate Justice Committee from the UK. Allow me to hand over to our chair, David Zimmer. David served in the Legislative Assembly of Ontario as a member of the Liberal Party of Canada and served as Ontario's province's longest-serving Minister of Aboriginal and Indigenous Affairs. I'll let David introduce Liberal International and the Climate Justice Committee, and then I'll introduce the speakers.
Well, thank you very much. I'm the chair of the Climate Justice Committee. The Climate Justice Committee derives its mandate from the Berlin Declaration on climate change. And the goal of Liberal International is to try and build Liberal International as a credible actor in the international climate change community. And it's seminars and discussions like this, where everybody's thinking outside the box with new ideas, that goes a long way to having people pay attention to arguments and thinking that comes out of Liberal International. So thank you very much for doing this, Imad.
Thank you, David. So our two speakers I'm delighted to introduce have been both cited authorities in this novel, The Ministry for the Future. It's one of Barack Obama's favorite books of the year, so don't take it on my word that it's a great novel. Take it on his. Dr. Dalton Chen is going to present the concept, a new concept, with which I want our Climate Justice Committee to grapple the details, find the details on. He's going to delve into the details of what carbon currencies look like, what they're aiming to do, how they work, and Tom Athanasiou is going to be helping kick the tires and take a skeptical view so that we really understand what the barriers to implementation are and see whether it's feasible. Dr. Dalton Chen founded the Global Carbon Reward Initiative. He is a qualified civil engineer and hydrologist, and he holds a PhD in engineering from the University of Queensland in Australia. He did his doctoral research on the hydrology of coral K in the Great Barrier Reef, and he has 20 years of combined experience in groundwater management. He's a thought leader in the development of public policies based on digital currencies and is a member of the Blockchain Climate Institute, and he developed the Global Carbon Reward policy to reduce and remove carbon at the speed and scale that's needed to stabilize the climate and meet the 2015 Paris Agreement's objectives. He is the Dr. Chen that is cited in the Ministry for the Future. Tom Athanasiou is co-director for the Climate Equity Reference Project, an initiative that develops tools and analysis to advance economic equity as a practical means to reaching a global climate compact. He focuses on distributional justice and international cooperation. He is active in climate negotiations and coordinates the International Climate Action Network's Equity and Effort Sharing Working Group. He's the author of Divided Planet, The Ecology of Rich and Poor and Dead Heat, Global Justice and Global Warming, and the co-author of Greenhouse Development Rights, The Right to Development in a Climate-Constrained World. Welcome, everybody.
So I'm just going to introduce the Global Carbon Reward. And some of you may have heard of The Ministry for the Future, which is a science fiction novel written by Kim Stanley Robinson, an American. Oh, you got it right here. You got that version with the clock on it. I think that the book cover had changed depending where you buy the book. But Stan, when he was writing this book in 2019, he found my papers, or some of my papers, and it inspired him to use the policy as a fictional solution to the climate crisis. And so what's interesting about the novel, perhaps you've read it or read some of it, is that it's kind of a bleak, realistic look at the future, but also including some maybe optimistic technological solutions. But he used the idea of carbon coin, which he took from this policy I've developed, in the past 10 years. However, it's actually called carbon currency or something different. And he actually quotes my name in the book. So he talks about Chen's papers, that's myself. And through the book, we've actually attracted more attention to the policy, and it's brought people to the project. In the start of the novel, he talks about heat waves and a heat event that kills millions of people in India. Interesting is that the science behind that is actually pointing towards something pretty scary, whereby if temperatures rise to over 2 to 2.5 degrees, there would literally be millions of people at risk to unsurvivable humid heat. So there's something to think about. There's a lot of other scary things that would occur at 2.5 degrees of global warming. So we'll just quickly go through the problem solution paradigm. So I started this work 10 years ago on a hunch that a new tradable carbon asset would be needed to finance the mitigation of greenhouse gases. And so I've developed both a policy and a theory, and it just happens to have come together. It's been a lot of work. It's very difficult work. And it's brought together some very important ideas. One idea that it addresses is the notion of tipping elements in the climate system. So tipping elements are a fairly new concept, but basically they're subsystems of the climate that have a non-linear and somewhat unpredictable tipping points that, if they're triggered, they can disrupt the climate system, amplify climate change, and potentially cascade, causing other tipping elements to tip over as well. The apricot-colored circles indicate the tipping elements that are already close to their tipping range. Coral reefs actually are already at their tipping point. We've had the 4th global coral reef bleaching this year. The Great Barrier Reef is suffering terribly. The others are starting to shift. The Greenland ice sheet's accelerating and it's melted. The Barents Sea has record temperatures. Permafrost is thawing more quickly. And the Antarctic sea ice is melting much more quickly in recent years. Actually, also the thermohaline circulation in the Atlantic is now considered to be vulnerable to tipping before the end of the century. So different analyses, different methods tend to indicate that there's something going on there. This is just the Earth system tipping elements. We also have systemic effects from societal systems, financial systems, political systems, information systems, governmental systems, which also introduce systemic risks. And the work I've done is to bring all of this complexity into a framework that explains the different systemic risks, kind of why they exist, and a classification for them to begin to resolve these problems. So one item or feature of the policy, Global Carbon Reward, is this new carbon asset that has somewhat unusual units, and it also needs backing by central banks. So with the carbon asset that I call a carbon currency, XCC, and the central bank backing, it puts this policy into a kind of a gray space. It's on the fringe of economics. Yeah, anything to do with currencies is generally fringe, cryptocurrencies. The BRICS are now putting forward their own ideas for a gold-backed currency. So there has been a lot of innovation in recent years in currencies. There's crypto, of course. There's the BRICS currency. There's central bank digital currencies. And there's other kinds of digital network currency systems like PayPal and so on. So there's a lot of innovation in this space or in currencies in the last 10 to 15 years. But this new carbon asset, it's not really a currency for buying things. This is where it does become a bit confusing. It's not actually money. It's just a financial asset. It's not a medium of exchange. It won't compete with the US dollar. You can't buy anything with it. It's a financial store of value. And the unit of account is 1 ton of carbon dioxide strategically mitigated for 100 years or more. Unit of account's very important. A lot of thought has gone into the unit of account. The concept of strategically mitigated carbon is a very specific concept. It's taken a lot of explaining to point out what that means in the policy paper, in the theory. So the general problem for climate is the global carbon balance. And currently, we're deviating far away from 1.5 degrees. We're already going past 1.5 degrees almost. The key problem is that we have high rising historical emissions, and then we need to exponentially decline our emissions to avoid the blue zone, the reductions. And then even if we did avoid the blue zone, which would be almost impossible because it's such a rapid decline, then we'd also need to remove the red to achieve 1.5 degrees. This is why it's considered virtually impossible. Different economic assessments put the probability of achieving this to almost zero now. And there's a cost. So the cost of the reductions is at least 3 trillion a year, because that 3 trillion is just for the clean energy transition. It doesn't include other things, decarbonization costs. The carbon tax is supposed to be over $40 to $100 currently, before 2030, but the globally average price on carbon is only about $5 or $6 US. So carbon taxes, cap and trade, and other conventional carbon pricing, it just is not popular enough. It doesn't get mobility. The cost of removal will be at least $1 trillion a year, and nobody has put forward a policy to fund that. It doesn't even get mentioned at COP meetings, or very rarely mentioned, not that I know of, because no government has a policy or an idea of how to fund that. I mean, who can afford $1 trillion a year? So there's a lot of major problems just in looking at this graph, and this sets the context for what the world needs to resolve. So the reward rules of the policy addresses these carbon balance problems. It provides debt-free grants for cleaner energy, debt-free grants for cleaner business, and debt-free grants for carbon removal. Now, there are a lot of nuances and details in this policy. This slide and all the slides I'm showing you are very simplified versions of the policy, because we don't want to go through the details here. But one important point is that when this policy is used, it will provide explicit prices for carbon removal. It's one global price and one global market for removals. And it will offer flexible or customized prices and rewards for cleaner energy and cleaner business. And the way it produces customized rewards is very important. It creates the flexibility we would need to strategically mitigate every sector of the economy, including the world's energy supplies. So that's basically what this policy is about. It's providing these rewards. There's a lot of administration behind this approach. And also there's a need to fund it somehow. Hence the connection to central banking and monetary policy. So I'm not saying that this is easy to understand, but then again, it's not too difficult either. It's just depends on what you find interesting, whether you'll understand it. Because basically, the mechanism is that we need an authority, which is in the bottom left corner, number one, the issuer. So the issuer will be a new international body that reviews projects and then issues them the carbon currency, XCC, as an incentive. And then in return, these projects, the project investors or the awardees, they need to sign on to service level agreements, SLAs. So these service level agreements define what needs to be done by the project owners to satisfy the authority's requirements for being paid. This is all to do with the technology and methods behind the measurement, reporting, verification of the mitigation of greenhouse gases. That's a whole world unto itself of technical details, which is quite sophisticated and complex. But that's why the service level agreements are there. So once the awardees, the projects, are given the XCC, the carbon currency, that cannot be used to buy things. It's a financial asset. So they would need at some point to sell it for fiat money or national currency, be it euros or US dollars or British pounds, Chinese yuan, so on. And that means this XCC will be tradable in the foreign exchange currency market for national currencies. And this concept is actually not new. You might be surprised to know that there are other commodity-based currencies already in the foreign exchange. There's XAU for gold, XAG for silver, XPT for platinum, and XPD for palladium. So XCC is actually a commodity-linked asset. It's linked to mitigated carbon. Now, if there are private buyers for the carbon currency, then it solves our problem. But the global marketplace won't simply buy the XCC simply because they feel generous. Then they need a reason to buy it. And that's where the central banks come in. There's a special financial mechanism that, in a sense, converts the XCC into an investable asset, a limited risk asset that is investable and appreciates in value. And it's managed according to market theory. So that's a bit of background in the financial mechanism. Just to note that the central banks are the buyers of last resort. They create demand when the currency traders don't buy enough. Because remember, we are planning to create demand equivalent to $3 to $4 trillion a year. That's roughly the size of the economy of France or Germany, if you know what I mean, but spread globally. That's why it's such a big policy involving all the world's central banks.
Dalton, can we just pause there? Go
Sure.
back to that slide. I'd like us to just workshop like the slide and like make sure that everybody understands it. And Tom also has injects his thoughts on this slide as well. Now let's come back to the bottom left corner, the Carbon Exchange Authority. What role is this playing? So just the step back before this, let's go to the previous slide. So it's the last thing that you said, we're trying to inject $3 or $4 trillion into the economy to get us into the business of cleaner energy, cleaner business and carbon removal. And you need money for that. So next slide, and onto the slide where we are. And let's start out here. So project investors, I guess I understand that. Those are the people who are coming up with projects to reduce carbon from energy projects, from business, and even remove carbon with nature-based solutions or carbon dioxide removal projects, whatever. Currency traders, they provide a sort of market value to the carbon that has been reduced or removed. This issuer, what is their role? Is it like ensuring a standardization?
Yes, it's a authority for the whole policy that is in charge of the standards and the administration. So if you think back to the Ministry for the Future novel, the Ministry for the Future is actually the issuer. So the central banks don't issue the carbon currency, XCC. It comes from a new organization called the Carbon Exchange Authority, which would be ratified under the UN. It's a new organization that you could think of as being like the IPCC, except the people who work there are doing all the scientific work to get this policy working. There's a lot of science behind it. So
this is a radical idea that you have some sort of monopoly power in the world, one authority in the world to ensure, break it down for us, standardization and what else?
yes, they have a mandate that is to fulfill the objectives of the policy. It would be the people who would be employed will be people from every country, roughly proportional to the size of every country's economy, because you want fair representation. So there's a governance there.
Representation by size of economy, then you'll...
Yeah, actually maybe by capacity is a better explanation.
Maybe we can park that. I'm sure Tom's got many comments as well.
Ahmad, can I just jump in here and make some
Yeah, please.
very quick responses to this? So first of all, I'm pleased to be here in celebrating Stan's book because Dr. Chen was involved in coming up with this key idea, key plot device in the book. I'm going to call it a plot device, and I was instrumental in teaching Stan how the UN process actually worked. What I want to say, I'll say a couple of things about this. First of all, in the real world, where international trading is being negotiated, and very, very painfully over a multiple year period, and the problem that Delton has represented on this slide under the SLA, the service level agreements, is a major stinker, a really major stinker. The problem of measuring and verifying decarbonization activities is what makes market-based instruments so subject to gaming and corruption. And the gap that would have to be closed to turn this plot device into a real-world mechanism is the gap by which the decarbonization represented by a unit of currency can be trusted to correspond to real decarbonization in the real world over have to matter to the climate system. And so I'm not saying this problem can't be solved. I'm just saying it's not a problem of that can be conceptualized or understood at the level of an economic instrument like this. It's a political and economic problem that it has to be solved in the very, very messy geopolitical and geoeconomic environment that we currently inhabit. So that the other point I want to make, which is also a response to Delton, which is much more supportive, is that I want to congratulate him for talking honestly about the size of the financial problem that we're facing. It is indeed a problem that is denominated in trillions of dollars, not in billions of dollars. And if there is a single takeaway that you, if there is a single takeaway that you and your committee take away from this seminar, it is that this is the size of the problem. And one of the reasons why the negotiations are going into such a fascinating period, I mean, a lot of people don't know it, but the next 2 years are going to be as important as the 2 years before Paris, is that finance is finally at center stage in the negotiation. And there are all sorts of ideas percolating around the international community as to how to generate this kind of money. And I mean, and the question is, where is our Keynes? Where is, the last time the international economic system went into this kind of crisis was after World War II, when we had the creation of a whole set of new international institutions, including the International Monetary Fund, the World Bank, the multilateral development banks in general. We're in a similar period now. And so those are my initial responses to this. It would be a good idea if it could be booted, and if it could be managed and kept from sinking into abject corruption. Unfortunately, our real world experience with market-based instruments like this is that they are very easily gamed. And I mean, almost all offsets, carbon offsets in the world, like really almost all carbon offsets in the world are bullshit. And you need to keep that in mind. So I'll stop there and let other people talk.
Thank you. Sorry, Delton.
Sorry. Yeah. I'd like to comment, if I may.
Yeah, I'd love you to comment. Let's just take a stock of what we learned there from Tom's intervention. So I think it's coming to the issue of credibility. And Delton, I think you and Tom are speaking in the same language in terms of the unit of exchange, which is a ton of CO2 equivalent, strategically mitigated for 100 years. So that I think you'll both agree on that being the unit of exchange. The question is ensuring the integrity of the system. And Delton, from what I've heard you say, with one issuing body that's not like an independent nonprofit like BERA or Gold Standard, which is set up for project developers to incentivize to, bullshit. Are you talking about a system that moves away from the current system that we have to ensure that we have a greater level, and it's building on the work of, I don't know, the institution, the integrity for voluntary carbon markets, IVC, VCMI, to ensure that there is this sort of credibility. I think I said Tom has identified for us a key barrier to mobilizing the sort of financing that's required, and its integrity. So that's my question. Delton, you want to respond. I also noticed that David's got a question. Let's bring them together. Sorry, David, what's your question before you come back, Delton?
Well, I noticed speak. Yes, I am. You slipped in a remark that at the if somehow the market didn't take up these investments, that you expected the role for the central bank to step in and take up the investment, thereby creating a demand. But that's essentially a political question, and the central banks are all operating in different political environments and different pressures. So have you given any thought to how central banks, what their criteria might be to take up an investment like that, like this, absent political pressures? And of course, the whole concept of a central bank being subjected to political pressures is anathema. So how will you manage that piece?
Great questions. I might start with Tom's question point. There's the corruption of existing carbon markets through offsetting, particularly in the voluntary markets, and possibly also in compliance markets. The point about this carbon reward is that there is no offsetting. Okay, that's one of the key.
No. I wasn't saying that there was offsetting. I was saying it was another market-based instrument, and it would also have to be verified.
Yes, that's right. So market-based instruments have a bad reputation currently because of the offsetting problems that have been happening in the past 20 years. And but it's not necessarily the case that market-based solutions don't work. They have worked in the past with acid rain and other kinds of pollution. Okay. So the point I want to make is that because there is no carbon offsetting, it's funded through a monetary investment approach. It actually avoids offsetting generally. There's no offsetting in the policy, and all the carbon that's mitigated here cannot be used to create carbon credits and cannot be used to offset anywhere. So all of this carbon here that's mitigated, it's immediately retired and it doesn't appear in any carbon markets. Okay, so the XCC, which is the asset that's issued for the mitigation under the conditions in the service level agreement, that when that XCC trades, because these people here will buy it, they'll buy the XCC, and the central banks will buy the XCC. When they buy it, they're not buying any carbon. In the sense, there's no transferability of carbon. It's only a transfer of the store of value. All the carbon is retired. Okay, so this reduces the risks just generally around the world. Okay, now in terms of the ability to maintain control over that carbon, it's maintained service level agreement.
Sorry, Dalton, could we just pause there, because that is it is a different mechanism, and we just need to make sure that we're comfortable with understanding that. So this central banks, the central banks here sort of act as a sort of, I don't know, lever to assure traders of currencies that this carbon that's been reduced and avoided, it's transferable into currencies.
Yes, their role is the guarantor. Oh, sorry about that. I just accidentally pressed the button. As guarantors, they're just guaranteeing the value of the XCC stays above a dynamic floor, price floor.
And what sort of, and you said in your previous slide that in order to get action, you need to have it valued. You need to basically be able to have that unit of account be worth. You basically need $1 ton of carbon dioxide equivalent to be trading at about between $40 and $100 per ton.
Yes, I can show the chart, approximate chart.
That's fine for now. Okay, I think
It's
so.
going to rise from 0 to somewhere up around $200 a ton
Okay,
for
so
carbon removal.
so
Yes, do you understand that you haven't responded to my criticism?
Repeat the question.
I agree. The whole cycle here with the guarantors and the traders and the issuers is not the question.
Mhm.
The question is whether the original asset actually corresponds to decarbonization in the real world. It's the verification problem, which is the stinker. And
yes, that's I'm an engineer, a scientist. I study the nature. That's my job. So I'm fully aware of that. And that's why we have these service level agreements, which are evergreen contracts that keep these projects honest through time. So they're required to
okay.
regularly review, and the service level agreements are tailored to the project. So if you have, say, a forest, you want a certain kind of service level agreement that's tailored to forests because they're risky operations. But if it's, say, some industrial process that's fairly straightforward, you have a more relaxed service level agreement because it's easier to record.
And the other thing that you were making, the other point that you were making, to come back to Tom's question about integrity, is that it's administered by one body that's answerable to the UN, right?
Yes, ideally it would be endorsed by the UN, kind of coming in under the UNFCCC, and it's mainly a technocratic organization. It's not, once it's got its political mandate, it's really a technical job of doing all the measurement, reporting, verification, and administration. And it's such a big market. Like we're talking $3-4 trillion market annually. They would never have enough staff. So the MRV would be subcontracted out to the private sector, and the private sector would have to become certified and accredited to maintain the standards for MRV and to keep these service level agreements functioning.
Tom, can you come back and tell us how you see that this could be gamed and corrupted?
Well, I mean, I just think that yeah, I don't want to be understood as trying to say this is a bad idea.
No, we just want to kick the tires.
Yeah. I'm just saying that we're talking about an instrument here that would attract potentially a great deal of money, particularly if the central banks actually got involved and at the level of guarantors. And I would remind people that in the novel, the participation of the central banks is really what makes the whole thing possible, right? And that the verification, the measuring, reporting, and verification problem, the MRV problem, as Delton referred to it, is a problem that is common to all market-based instruments, not just this particular instrument, which Stan called carbon coin. And the question I'm asking is from a just exploring the scope of the problem here perspective, I mean, there's one thing to stay inside this mechanism and to discuss this mechanism and its pros and cons and the challenges that it would have, but it's another thing to go up a level and to look at the actual world that we're in and to ask if this world is a world that is going to be able to construct and build out and operationalize a system like this. The answer might be that the dysfunctional governance systems that currently characterize our universe are so dysfunctional that only a market-based instrument like this has any chance. The answer might be that dysfunctionality and corruption, in particular, and I'm by corruption I mean really the power of unregulated private actors, corporations, right? And wannabe corporations. If the governance systems that we currently have are simply incapable of managing a system like this, I mean, we don't know the answer to these questions, right? I mean, one of the things that I like about this proposal, and which Stan liked about this proposal, is that it gives us a way of understanding that we might be able to move the kind of money that we need to move in order to stabilize the climate system. And I honestly think that should be the center of the discussion rather than this particular proposal. I mean, the question politically, from the perspective of a political party, is how can a political party that is rooted in one particular country, in your case, the UK, and has all kinds of local political pressures on it, how can it advocate for a system like this effectively? And I mean, what would it need to advocate in terms of a change in the UN negotiations, a change in the UN itself, in order for this kind of thing to become possible? And you know, so I mean that's really the question, right? The question is, what, as we go through in the next 5 years, there's going to be more and more discussion about moving trillions of dollars, which is what Delton is talking about here. He's making a specific proposal for moving trillions of dollars and tying the motion of that money to decarbonization on a large scale. This conversation is not going away. We need to move trillions of dollars. The question is whether or not we can institutionally. And I would point out to you that the International Monetary Fund has just reestimated, updated its estimate of the total amount of money that goes into fossil fuel subsidies annually at $7 trillion a year. $7 trillion a year now, according to the IMF, is going into subsidizing fossil fuels. What sense does it make to talk about a speculative mechanism like this without also talking about the political and economic mechanisms by which we're going to back out the $7 trillion subsidies that already exist every day in the real world? So it's really a governance problem, and making a proposal like this work would also be a governance problems. And what makes us think we can solve these governance problems? I mean, that's the question I think we should be discussing.
Yeah, Tom, just to give you a little bit more background, we're not just a UK organization. So Liberal International is a global federation of 120 liberal and progressive democratic political parties. So David here has been the longest serving minister in Ontario for Indigenous and Aboriginal affairs. And the other members of this committee come from Morocco, Spain, France, South Africa.
My bad.
We're very much we very much do have our international hats on to talk about a system that is rooted in multilateralism. But yeah, when I wanted to dig down deeper into Delton's proposal because it is an idea, but all ears into other things that we need to tackle first, and all ears into the sort of barriers that we need to sense check whether they're feasible to surmount for this mechanism to make sense. Fossil fuel subsidies, for example, that's very much something that Liberal Democrat Party already is against and has been working, against for quite a while. Delton, please.
Yeah, the fossil fuel subsidies of 7 trillion, that's actually only about $500 billion of cash subsidies, and the rest are notional externalities. So it's not as large as it might appear. Okay. I'll just make some comments just to respond to the governance question and just the big picture. From an MRV, measurement, reporting, verification, this is very different to existing markets, because in existing markets, you have about 3 actors. You have the polluter, you've got the register of the carbon credits, you've got the buyer and the broker. Between the project, the registry, the broker, and the buyer, none of those people have an incentive to be honest, because the more dishonest they are, the more money they make, and the more greenwashing they get away with. That's just built into the system. So here, we don't have those interactions, because the Carbon Exchange Authority is a public institution. Nobody in there is going to make more money by being dishonest, because they're salaried technocrats. And the relationship is only from the project to the authority, based on the service level agreements and these reward payments. So the dynamics is different. It's a public-private partnership with accounting that's continuous, and we can take the money back if they have a problem. So if they leak carbon or there's corruption, we can always take the money back or request it back. In a conventional policed commercial relationship, there's a contract. So it's not all lost. I'm not saying it's going to be easy. In fact, I think it's very challenging and difficult. But it's a lot. It's going to cost a lot to keep everything honest. But it's not impossible. What was the other point? Oh, yes. There's more to this than even just this financial mechanism. There are some hidden problems. Another is the fact that the carbon currency is not a security. There are no interest charges in its issuance. It's very similar to a commodity. And so when the central banks buy it with bank reserves, it has a different dynamics to a bond, a government bond or a corporate bond, because there's no interest charge, there's no debt created when it's bought by the central banks. And this is important macroeconomically, because one of the big drivers of emissions globally is the debt carried on investments and lending by banks. It's actually interest charges and debt that's driving unsustainable growth to a large extent. And so we're interjecting in the world economy with this debt-free instrument to mitigate greenhouse gas emissions and put liquidity into the world economy that's debt-free, effectively. So the XCC is a debt-free asset. It goes to the project. They can sell it for currency. And if there's not enough demand, the central banks buy it, right, down here. And when the central bank creates bank reserves, that goes into the economy, goes back this way. I should probably make that a different color. And when the bank reserves go into circulation, that's a very important point, because those bank reserves are created debt-free. They're not created as loans. And this is how you can reduce reliance on bank lending, but create liquidity. So if you have more debt in the system, you're adding to the global debt wave. You're adding to unsustainable debt stress in developing countries, and you're going to create a bigger Ponzi scheme and a bigger financial bubble. It's going to blow up in everyone's face. Do you know what I mean? So we're relieving organizations of their debt stress. That's a very sophisticated problem solution paradigm there. But that's the. I'll just make a statement which I can't prove to you here and now, but my finding is that I don't think there's any other way to scale up to $3, $4, $5 trillion of targeted finance. There's just no other way to do it, because economists have looked at every other mechanism: green bonds, climate bonds, green quantitative easing, the Bridgetown. What's it called? Bridgetown for me, a motley. Yeah, I don't see anything coming out of that. I haven't heard of any other mechanism that can actually scale to the amount of money we need. So
possibly more carbon taxes on more carbon taxes.
Oh, yes. So this isn't excluding carbon taxes, but the problem with carbon taxes is they don't solicit cooperation. Okay, so
there's talks around that about internationalizing carbon taxes, something that Kenya's pushing forward.
Right. So carbon taxes, as I said earlier, if you include taxes, cap and trade, and everything else, it's only $6 per ton on average globally, and it's supposed to be up to $100 a ton. So you've got a long way to go.
The conversation, the conversation on carbon, David, your point about how this is not a loan-based instrument is a very interesting one. I hadn't realized that, and I think that that's very significant. But I don't think you need to be as skeptical about carbon taxes as you are. I mean, my understanding is that the carbon tax conversation is really taking off. At least it is in the circles that I travel in. And
I think so. I think it's being moderated by the COP28 presidency right now, with President Ruto also being a champion. And we're talking about different levels. We're talking from aviation to fossil fuels at source, possibly maritime, although that could be quite regressive for African nations. And then a few other things. It's still nascent enough that we haven't really seen it peter out and fizzle out. So it's still, I agree with you, Tom. I don't think we need to be so skeptical about carbon taxes right now. We're not going to exclude that, but this is an interesting idea. Tom, I'd be really interested in hearing why you think it's really significant that this isn't a loan-based initiative.
Well, I'm not an economist, and I can't speak to I can't speak to Damon's point, Delton's point about how the fact that this is not introducing debt into the system is of decisive macroeconomic importance. So that's above my pay grade, but I do believe that it's very different from a loan, and that it would have that it would interact with the problem of debt and the problem of inflation in a very different way. But I don't have an expert opinion on that.
So Tom and Delton, the direction I'd like to now take this conversation in, and I'll just let you know who Dave Bryant is, who's just joined us. He's the Shadow Minister for the Environment in the South African Parliament. Hi, Dave. Would you be able to talk about so you've got politicians on this call. and politicians will review this recording as well. How do we make this a political reality? What do you need to make this happen?
Well, the theory of change is that what we need is just to raise somewhere between $5 and $10 million to run a demonstration of the policy, and that will pull in a few countries. I just need a few countries to be involved in the demonstration and then consider a small pilot, a very limited pilot that just tackles one problem somewhere in the world. And that's it. That's the theory of change, because once a few countries are running a pilot and the demonstration and the policy analysis has been done with economists and central bankers and scientists and political experts, that will all be published and presented in workshops. And the theory of change is that a group of countries will, once they pilot it, it will come into the UN for discussion. Okay, people will talk about it because it'll be very visible in the media. It will attract a lot of attention. Now, attracting a lot of attention doesn't sell a policy necessarily. Like, everybody knows what a carbon tax is. However, the theory behind this policy is that governments will not only take it seriously, they will want to join in. And the reason is there is no cost for the government's fiscal budget. The costs are monetized, and so none of the costs appear in the government's fiscal balance sheet. And when the carbon currency comes into circulation, so for the countries that are part of the pilot or part of the policy, any carbon currency they receive, within their borders, can be registered as foreign income. So it adds
let's
to
just talk about practically, how do we get a pilot off the ground? What sort of country would demonstrate this? Would it be a high-income country? Would it be a low-income country?
Yes, I did. The theory is that we'd attract a few countries from Africa, probably, and it doesn't have to be Africa, but
whose central banks would be the guarantors? Would it be African central banks, or would it
be in the demonstration? We don't actually have to use the central banks literally. We just involve them in the analysis. A pilot is when you actually use the central banks. So in the demonstration, we don't build a carbon currency. In the demonstration, we bring in a few countries intellectually with their central banks and their economists to analyze it, right? So that's the first step. That's very easy, because that's just finding a few governments to be involved in the assessment of the policy. We've almost got there, and we don't even have any money. So I've almost gotten there without even trying. So it's possible. Now, once the demonstration gets going and it's properly funded, and the research is being done, the publications and the workshops, undoubtedly we'll find a few countries who want to go to pilot stage. So if that happens, then that's it. The policy goes to pilot, and then it becomes discussed in every central bank meeting room around the world. In every conference on climate and central banking, they'll discuss the pilot and the policy, because it'll be right in their face. They can't help it. And then some governments will think, hey, hold on, we could support this because it solves a lot of problems, particularly the Global South. The Global South will think, bingo.
Delton, let me invite Tom to kick the tires here.
They'll come in with their central banks, and they'll form a club, and they'll say, we're in the club, and we're going to build out the policy. Come and join us. And they'll just start with very basic, modest programs until it reaches a critical mass, and then it can become more aggressive. And that's either it will live or it'll die at that point. I can't predict because I don't have a crystal ball, but my role is not to get it fully implemented. My role is to get it to this demonstration and pilot stage so that the world can figure out if they really want it, if you know what I mean.
Thank you, Dalton. Tom, tell us, what do you think are the barriers here? How do you think, if we're interested in advancing this as a policy prescription, how do we surmount those?
Well, the first thing you need, I mean, I have no opinion on whether it would be easy to spin up a pilot or not. I think in terms of getting a real buzz on this thing, the first thing you need is a very crisp explanation of how it differs from carbon trading, vanilla carbon trading. And I mean crisp. And because I can tell you right now, Ahmad, if this webinar was to end right now, and my wife was to ask me, how is that idea different than carbon trading, I could not give a 25-word answer. So that's one thing you need. Another thing you need is a convincing story on why MRV is not going to be a problem, because the waters have been poisoned, okay, by market instruments of the initial round of market instruments. And so you have to explain very clearly why this carbon exchange authority, this public-private partnership, is going to be able to solve that problem in a sustainable way. Other than that, another thing that always helps tremendously in the UN negotiations is to have at least one party that is a champion of the idea, right? So if you had an African country, say, that wanted to host a pilot, and that would be helpful. Those are my initial thoughts. David Zimmer wants to speak.
David, you're on
Okay.
mute. But thank you, Tom. Just to remark, Dalton, so that we can take this forward, can you? So I think I'm convinced that there is a convincing story on why the MRV is not going to be a problem with the Carbon Exchange Authority being a publicly funded institution and run by technocrats. I think I'm convinced there. But if you could give us like a 25-word explanation of a crisp, like 25-word explanation of how this differs from carbon trading, that would be amazing in the follow-up to this, so that we can take it to the Climate Justice Committee. And with regards to an African nation hosting a pilot, Dave, that's maybe one for you to think about when we get that explanation. Otherwise, I also work quite deeply in Africa and a number of ministries of finance there. David.
Yeah, just following up on Tom's comment, but finding a political party, if you could even zero in and find a well-known, competent minister who has the capacity to put the arguments forward and has certain persuasive values and so on. We can probably each of us think of at least a couple of ministers sprinkled around in various governments. I can think of a name. I'm sure Dave Bryant can, and others can. So, has anybody got the name of a competent minister in a government somewhere who might pitch it?
Yeah, I think we can solve that problem in the Climate Justice Committee, to be honest.
Another option is to invite them to review the policy paper. That's a good way to bring them in without having to do a hard pitch. Would you like the I'll just skip over to
I saw Gigawatt Global. I worked on that transaction. I saw your solar panel there. I made that
this
happen.
one down here. That was in Africa, wasn't it?
That's in Rwanda.
Rwanda. Is that the first solar plant in Africa?
That's the first utility scale solar plant in sub-Saharan Africa, excluding perhaps South Africa. Yeah.
Okay, I'll focus on this slide then, since there's some
But it was
cultural
done
connection.
without any, I mean, maybe there was some incremental carbon credits there. Sorry, Dave has a question here. Can I just invite him to speak? Dave.
Thanks very much, Imad, and hello to everybody. My apologies for joining late. We're currently in the midst of a very important election, and we're less than 2 weeks away. So I've been on the campaign trail, unfortunately, the whole day. So I'm here for the second half, but I've kind of got the gist of what's going on, and just a couple of points, I suppose. South Africa's we only recently started doing carbon offset trading with our own Johannesburg Stock Exchange, and we do have carbon tax legislation which was implemented a couple of years back. But we are going through a bit of a tricky phase at the moment where we have something called the JETP, which is the Just Energy Transition Plan, and it's actually been quite lauded, I think, internationally as being very progressive, and in terms of legislation, it's something that a lot of countries are now aspiring to, particularly in the global south. Challenge, unfortunately for us, is the implementation side of things. We have a very slow growing GDP. We have serious issues with debt as it is, and a lot of other volatility within the government, partly political, but also other reasons as well, high unemployment, etc., etc. I think my question would probably, and I apologize if this has been answered already, but how realistic do you think the prospect of a kind of sophisticated carbon trading system, particularly on the stock exchange itself, would be within the global south? Do you think it's realistic, or do you think that there are potentially other economic drivers and mechanisms that we could use to further the cause, and at least try and offset some of that in a slightly different way? I hope that question makes sense. I will go back and look at the presentation from Imad after this as well. Thanks.
I'd like to speak to that because it was pointed out to me by Tom. He wanted a crisp answer to, how's this different to other carbon markets? And you're asking about carbon markets in Africa. Is it feasible? This might help to explain where I'm coming from. So what I'm saying is that the way the world is structured today, with all the conversations about carbon markets, those ideas are explained by neoclassical economics. We have carbon taxes, cap and trade, carbon subsidies, and these two here can interface into carbon offsetting. Okay, that's possible, and there's voluntary versions of this as well. And what I'm saying is that what you're looking at here are the main options identified by neoclassical economics. So you might not know about the theory of Arthur Pigou, but Arthur Pigou's theory in the 1920s explains, I'll just change the color, explains these two policies, literally, are explained by Arthur Pigou. And this policy is explained by Ronald Coase, okay, private bargaining. And what I'm saying is that this policy here is missing in the textbooks. So from a very philosophical angle, I'm not expecting you to understand what I'm saying in detail, but emotionally, I'm trying to convey a concept that this missing thing is the reason why carbon markets aren't working, because we're not using the full ensemble of tools. And this particular policy, which is missing, is the one that can fix the problems. theoretically and practical. I'm convinced of that. So I'll
So 25 words.
in 25 words.
Yeah,
the
why is that?
carbon
Why
reward,
is that different in 25 words?
because it includes the concept of systemic risk, and it prices the systemic risks in the economy related to carbon. So it's the carbon reward, and it has the features and functions for managing all kinds of systemic risk. This is explained in the policy paper that I'm going to share with Imad. So you can read the paper. It explains it. Why does it manage systemic risk? Because there are four major kinds of risk. There's the political gridlock created by the financial system. There are the Earth system instabilities. There is financial instability, which can also be a risk. It's not related to climate, but just general financial instability. And then you have ecological and community breakdown, which is another kind of risk. So the first risk that's blocking everything is the problem that we can't get finance out that is acceptable to everyone. You see, the kind of finance that the world has been pushing, the economists, is the carbon tax and cap and trade. So carbon tax currently is only 7% of carbon pricing in the world. Cap and trade is more successful, but these sticks, both theoretically and practically, they can't solve the problem. Practically, they can't because you can't get enough cooperation with taxes or any stick because the cost is too high. Okay, so you need to balance these taxes and sticks with rewards and carrots. That's the whole point. Now, the subsidies can work, but they're limited by national government. They're stuck in the fiscal balance sheet of government, and governments hate big expenses. Like if it's building aircraft carriers and starting wars, yeah, they like spending lots of money, but when it comes to the environment, they hate it. So subsidies will get somewhere, but they're not going to save the planet because they are national policies, like the Inflation Reduction Act in the US. It's an American policy. It's got limitations, and it's not going to solve the world's problems. Okay, so the reward, it has certain features in that it's scalable, it's fully international, and it can provide the trillions of dollars, and it's off balance sheet. It doesn't appear in fiscal accounts of governments, and the cost does not appear in private accounts or organizations or in citizens' accounts. Nobody actually ever sees a cost. And the way that works is through the mechanism I showed you in the previous slide. Okay, it's through the fact that we create an asset which is like a commodity currency, and then we create sentiment to buy it based on a central bank guarantee. So the understanding, remember, this is formalized. It's not just an idea. It's formalized into carbon pricing. I'll just come back and explain something one more time. This missing policy here called a carbon reward, this will make more sense when I explain that it's actually a mitigate and trade. So this is called cap and trade, right? From Ronald Coase. This reward is actually technically a mitigate and trade policy. That might make things more clear. You mitigate, you get the asset, and then you can trade the asset. So coming back here, what happens is we create this floor price, the price signal, which is the thick black line. That's the price that's backed by central banks, okay? And this is the price signal you need for forever, hundreds of years in the future, to fund the carbon removal, first of all, and then you use the same tool to fund conventional mitigation. So this is actually calibrated to what you need to take carbon out of the atmosphere. It's just the technical detail. It's actually going to look like that, because that's pretty much what it's going to cost per ton carbon reward for carbon removal to achieve the Paris goal. So I come back here. Remember, we've got to pay for this down here, the removal. That's what this is doing. This is paying for that removal on a per tonnage basis, and it's calculated from actual data. There's not much data, but it's actually figured out. So once it's guaranteed by central banks, and then you have supply, what will happen is it will trade above the floor because of speculative investment. Everyone will know that it can't go below the floor because the central banks will buy it up. So all the yellow is not possible. It's limited risk. So that means when people see this limited risk investment, they'll say, wow, I don't have to buy gold. I don't have to buy crypto. I don't have to buy treasuries. I can buy this as an alternative, depending on whether you want it or not. So it's going to have an appreciation, an asset appreciation. And so it's attractive. And then it'll have other utility in the world economy. Because when it has a lot of supply and it's got this spot price, what you'll find is that whenever there's any financial instability, people and organizations will buy this currency because they can de-risk some of their assets because it's protected by the central banks. It's a bit like gold, except gold doesn't have a floor. It's just pure market supply demand. Bitcoin doesn't have a floor. It can crash, right? Government bonds are pretty good because they're backed by government and they have a yield. But what happens if the US government goes in default? Big problem. You want to go somewhere. And that's why this becomes attractive. Now, keep in mind that by the year 2050, we're going to pass 2 degrees or get close to 2 degrees. By 2070, some CSIRO predicted that Sydney will be uninhabitable by 2070. Yeah. Imagine what the world will be like. It's going to be totally chaotic. High volatility in everything. Food prices, crops will be, you know, 1 year there'll be major crop failures across North America. The next year, rice won't be enough to feed billions of people. Everything will be chaotic. So to think about that, and then you've got this asset which actually mitigates the problem and is a hedge against volatility. So everybody will want to buy it. It's a given. That's why it's self-funding.
Thank you, Dalton. Let me just summarize what we've discussed. So we've taken a deep dive into a particular idea on how to decarbonize the economy. It's an idea for the Liberal International Climate Justice Committee to take away and consider. Our Climate Justice Committee informs policy making for a consortium, a federation of 120 liberal parties around the world. Dalton has presented the idea. Dr. Dalton Chen from the Global Carbon Reward Initiative has presented the idea. Tom Athines, CEO, the CEO and co-founder of Equity, has helped kick the tires on the idea. The next steps are going to be, Dalton, if you could share that paper when you're done with it, not only with me, but Irene, who will distribute it to the Climate Justice Committee and also to Tom. We'll see how we can workshop it into the next steps of distilling the idea into 25 words and how this is different from existing mechanisms. And I think we're bought into the idea that the integrity is going to be higher than current systems because the central body that's going to be responsible for integrity and verification is a public body. And then the Climate Justice Committee will mull over whether we want to take this forward to endorse it in a policy paper, position paper for our parties to consider. in a and work together in a multilateral framework. Dave, before we do that recording.
Yeah, just very quickly, I just want to say I'm very intrigued to read Dalton's report. I'm not an economist myself, but I know some people who are, and I think one of the things that's been lacking for a long time is a proper incentive, particularly for us. I think things like the carbon border adjustment mechanism, for instance, come across to certain people, particularly people in the developing world, as being a little bit heavy-handed as a trade tool, or like a trade weapon. And perhaps, this incentivized approach and kind of balancing the two could go a long way towards instilling more of a sense of camaraderie between nations in the global south and the global north. But thanks very much. And I won't hold you up any longer, but I'll look forward to reading. Thanks.
Right. Thank you, Dave.